Next question goes to Jonas. Keith wants to know, I'm turning 73 next year. I'll be tapping into my IRA for the first time with RMDs. You can do all that here in a second. Are there any pros and cons to taking a monthly withdrawal versus taking it all at once? And if I take it all at once, is it better to take it earlier in the year or wait until the end of the year?
Congratulations, Keith. Great question.
Mm-hmm.
You're at that age where Uncle Sam is on his 20-foot stilts and he's walking down your block and he rings your doorbell. Ding dong. Congratulations, you're 73. We've been waiting for this tax revenue all your working life, especially if you're a 401k millionaire. So back to the question. This is a great question by Keith. Should I take it out monthly? Should I take it out in a lump sum? You have pros and cons, wins and losses for each of them. If you look at the monthly paycheck that you're required to take out. So
RMD, required minimum distribution.
Yeah, that's exactly what it is. If you take it out on a monthly basis, you're going to have a predictable paycheck and you're not going to have to time the market, Doug. So if you look at this year in 2025, stock market went down 18% in April. Mm-hmm. If you just took out a little bit in April, well, everything came raging back this year. So your account balance looks a lot better. On the flip side of that, if you're taking out a little bit each month and you're taking out a monthly paycheck, you're giving up 11 months of the year to make a substantial amount more in your 401k or your retirement account if you're in a bull market. Mm-hmm. So you see the trade-off there, Doug.
Yeah. It's sort of dollar cost averaging in reverse as you pull out a monthly paycheck.
Right, right. So a lot of folks like to do a lump sum because they see how their account balance is doing. And if we're in a bull market, they like to take it out of gains that they have in their portfolio. So you look at the lump sum strategy. That's the big pro of a lump sum strategy. Gives you a little bit more flexibility if you're working with your advisor. The advisor and you could say, wow, we're in a bull market. This is fantastic. The S&P 500 is up 100% the last 5 years. Let's take my required minimum distribution in a lump sum because it might be all gains. So that's the flexibility.
Yeah.
I really like the monthly strategy a little bit better, Doug, because it's more predictable. And if you're looking at taking a lump sum each year, and you wait until, let's say, November and December, well, historically, October's been the worst month in the history of the stock market.
Yeah.
You might be forcing yourself to take a lump sum distribution out of your retirement accounts when your account value is lower. And you're doing the opposite of what we're taught financially successful investors do. You're actually selling low.
Right.
Instead of selling high.
Yeah.
And you don't want to be forced to sell low. So if I were to lean on one side, Keith, I would just set up a monthly sustainable required minimum distribution, have that automatically sent to your bank account.
Yep. Okay. Makes sense. Get in touch with your friends at Premier Investments and Wealth Management because it can be complicated, and especially the RMD thing, because if you don't start taking your RMDs, then there could be some other issues that you're going to have to deal with. Like you said, Uncle Sam on 20-foot stilts.
He can catch you on those stilts.
He's
got a big stride.
He's got a big stride. They can help you when it comes to tax strategy, when it comes to income strategy, when it comes to investing strategy. It's the TP. It's the total package. Premier Investments and Wealth Management. Premier Investments, premieriwm.com is the website. Head on over there, click on Get Started, answer a few questions. They'll provide the Premier Vision document, and that will get you started, whether you're 35 or 73, like that. It's not too late for you to get in touch with the professionals at Premier Investments and Wealth Management and make an appointment today. 800-383-6590. That's 800-383-6590.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Premier Investments in Wealth Management and LPL Financial do not provide specific individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Contributions to a traditional IRA may be tax deductible in the contribution year, with current income tax due at withdrawal. Withdrawals prior to age 59.5 may result in a 10% IRS penalty tax in addition to current income tax. Consult your tax professional about eligibility to Roth and traditional IRA contributions. Contributions and earnings in a Roth IRA can be withdrawn without paying taxes and penalties if the account owner is at least 59.5 and has held their Roth IRA for at least 5 years. Traditional IRA account owners have considerations to make before performing a Roth IRA conversion. These primarily include income tax consequences on the converted amount in the year of conversion, withdrawal limitations from a Roth IRA, and income limitations for future contributions to a Roth IRA. In addition, if you are required to take a required minimum distribution, RMD, in the year you convert, you must do so before converting to a Roth IRA. This recording contains only general descriptions and is not a solicitation to sell any insurance product or security, nor is it intended as any financial or tax advice. For information about specific insurance needs or situations, contact your financial professional. This recording is intended to assist in educating you about insurance generally and not to provide personal service. They may not take into account your personal characteristics, such as budget, assets, risk tolerance, family situation, or activities which may affect the type of insurance that would be right for you. In addition, state insurance laws and insurance underwriting rules may affect available coverage and its costs. Guarantees are based on the claims-paying ability of the issuing company. If you need more information or would like personal advice, you should consult an insurance professional. Forbes' Best in State Wealth Management Teams ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings, and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firm. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.